It's a bull year, everyone. There have been many predictions and expectations about the crypto market this year. Everyone seems excited, and so far the numbers have been in favor of many investors, especially Bitcoin investors. Of course, Cardano investors won't just sit and watch the fun. It's time to move forward. The fact that this is a bull year does not mean that a magical system has been set in place to make volatility far from the market. This is the same crypto market where we have clapped our hands in excitement and at the same time bit our fingers in regret. Even for Cardano ADA, nothing is for certain yet. Before we set our expectations on the moon about Cardano ADA scaling to great heights during the anticipated bull run for the year, the words of a certain analyst remind us to be extremely cautious. Many crypto analysts have a list of crypto tokens that they expect to make a run when the bull market returns. And according to crypto analyst Lady of Crypto, Cardano is not on the list. Last year, she noted that the crypto token would not perform well during this period. In a video posted to her YouTube channel, she stated that Cardano had a slow development pace and that it could not flourish in a fast-paced crypto industry. The development of Cardano did not defy her convictions, as she alluded to the time when the blockchain network experienced a delay in the Vassal hard fork, and other times when there was network congestion and an increase in transaction fees. According to her, Cardano is just going to continue to fall behind its competition until one day when the network becomes quote-unquote insignificant. But it is still an Ethereum killer, right? Lady of Crypto mentioned that no one was using the Cardano blockchain, using data from the crypto analytics platform DeFi Llama to justify her point. This time, her argument was based on the daily active users, protocols built on the network, and the network's total value locked, which Cardano was in the lows. While these rankings may not be wrong, she noted that it was bad for Cardano, which positioned itself as one of the blue chip cryptos. Its underperformance has been an issue of serious concern. This is 2024. Is it time to finally let go? Also, the crypto analyst noted that Cardano was slow and expensive compared to its competitors. She noted that Cardano's average transaction speed is 20 seconds, which is slower than other networks like Ethereum and Solana. Transaction fees on the network are also expensive compared to those other networks. She went on to state that the network was overhyped, and although the adjective may be subjective, she did not believe that applies to Cardano's case. In addition, she emphasized the fact that Cardano does not seem to have any real-world adoption. Although the blockchain company has announced partnerships with governments and institutions severally, the tangible results of these partnerships have been non-existent. However, we have experienced a rough patch for a while now. Cardano investors do not have to walk on eggshells in a bull year. Is it not just important for us to relish this moment and maintain an optimistic perspective? Cardano ADA has recently displayed a remarkable surge in its price action. The ADA USDT chart indicates that Cardano has made a decisive move, cutting through the local resistance level marked by the 50-day exponential moving average with convincing strength. The breakthrough above the 50 EMA is significant, as this moving average often serves as a barrier that differentiates bearish trends from bullish ones. Going through it typically suggests the momentum had shifted in favor of the bulls. With this explosive move, traditional technical analysis would suggest that ADA is set to continue its upward trajectory, potentially forming new higher highs as it enters a bullish phase. Notwithstanding, despite the strength shown in its recent price movement, there is a lack of notable long-term reversal signs. The relative strength index, while recovering, is not yet indicating overbought conditions that would confirm a sustained upward trend. In addition, the trading volume, although improved, does not show an overwhelming buy-in from the market that would support a robust long-term rally. There are many scores to settle, so to speak. Speaking of the fundamentals, Cardano's movements are still lockstep with the broader market. Like many other cryptocurrencies out there, ADA's price action is influenced by overall market sentiment, macroeconomic factors, and developments within the blockchain and cryptocurrency space. While the recent technical breakout could excite short-term traders, long-term investors are likely to be looking for more substantial shifts in the market dynamics before confirming full-blown bullish mode. Now, Cardano's current position above the 50 EMA is a bullish signal for the asset, particularly in the short term. But for a genuine long-term reversal to take hold, ADA would need to demonstrate continued strength and support from both volume and market sentiment. Cardano is exhibiting signs that could be implying a shift in market sentiment. The key metrics, which are net network growth, accumulation of large holder positions, and trading volume, are showing a positive trend, indicating potential bullish tendencies for ADA. Also, net network growth is a vital on-chain metric, reflecting the number of new participants joining the network. An uptick in this metric suggests increased adoption and a growing user base, which is inherently bullish as it typically correlates with increased demand for ADA. Accumulation by large holders, often referred to as whales, is another major indicator. Whales can significantly influence market dynamics due to the substantial size of their trades. We've seen this scenario play out a couple of times. The increasing accumulation hints at confidence among the influential market players, who may expect future price appreciation. On-chain data from various crypto analytics platforms confirming these findings, with a notable increase in large transaction counts and volumes, signaling that significant capital is moving into ADA. Plus, the assets market cap comparison shows ADA holding its value against major cryptocurrencies like Bitcoin and Ethereum, further reinforcing the positive outlook. Furthermore, the long-awaited approval of a spot Bitcoin exchange-traded fund by the Securities and Exchange Commission, the bull season in the crypto market will run quite deep. Spot Bitcoin ETFs are important because while people have been able to invest in crypto using digital wallets and through other funds that utilize derivatives, they will hold Bitcoin. This means it would give investors a vehicle to invest in that more accurately tracks the true price of Bitcoin. It is the next best thing to buy to the cryptocurrency itself, and there wouldn't be a need to rely on derivative Bitcoin ETFs or to have a digital wallet. And you get the gist. Making it easier to invest in Bitcoin may attract a wider pool of investors. It's similar to how a stock can reach more investors by trading on a major exchange, rather than only being available on an over-the-counter exchange. With a spot Bitcoin ETF, there is more credibility to crypto, making people comfortable with investing in it. And the more people putting money into Bitcoin could be a catalyst to send its prices higher. Furthermore, an upcoming catalyst for Bitcoin this year is its next halving event. These take place every 4 years, and the last one occurred in 2020. When a halving happens, the rewards that miners receive for validating transactions on the blockchain are cut in half. This further limits the rate of growth of the Bitcoin supply. In 2012, 2016, and 2020, the price of Bitcoin rose after halving events, and the same could happen this year as well. Halving is an important feature of Bitcoin as it ensures sufficient scarcity. The maximum number of Bitcoin tokens that can ever exist, after all, is only 21 million. While the eventual supply cap remains the same, a halving event will help reinforce and remind investors of that built-in scarcity, which can attract more investors to buy Bitcoin, especially for new investors looking to buy crypto. This is the best moment to point out that there is an undeniable connection between the prices of crypto stocks and the price of Bitcoin. If Bitcoin rises in value, crypto stocks can benefit as well. While a halving event hurts miners as it means that they'll get fewer tokens for mining crypto, larger mining companies can benefit as reduced rewards could push out competitors that can't afford to continue to mine at a lower rate of return. And the impact of the halving on rewards in terms of token volume may also be offset by a higher price for Bitcoin. Other crypto stocks besides mining stocks can do that as well, such as Coinbase Global, which operates a leading cryptocurrency exchange platform. We are also expecting a drive in the prices of Cardano, as well as other cryptocurrencies. There is a caution though. With a lot of excitement around crypto right now, investors should remember that there is a lot of risk as well. Bitcoin is a speculative asset, and while it could have a great year, as could crypto stocks, there could also be significant volatility ahead for these types of investments. So my advice to you is to relish the moment, but stay careful. But that's going to do it for today's video. Make sure you click on the subscribe notification buttons, and we'll see you in the next video.